Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. Now, before I jump over to the charts, quick announcement. This is the last standalone US market video that I'll be doing. What I'm going to do, I'm going to roll this into the ASX strategy session. So the US coverage will be within the ASX strategy session. And the reason I'm doing that is to avoid the duplication that comes with doing two videos and uploading things twice to YouTube and doing extra descriptions and thumbnails and all the different bits and pieces which goes on to doing it. So it might just be a 10-minute video, but there's a whole lot of behind the scenes work that goes into it. So from next week, you find the US markets covered in the ASX strategy session. Having said all that, let's get into today's charts. So kicking off with the S&P 500. Well, it's generally been a fairly quiet week for the US market, and prices have pulled back. They've pulled back from last week's all-time high, but the overall upward trend very much does remain intact. Now, I'm going to come back to the latest price action in a moment. But first of all, I just want to talk a little bit about last week's all-time high. So this was actually the 47th all-time high this year. And I'm sure like a lot of people will be watching this and they'll be thinking, well, it does sound a bit extreme, 47. And I know 47 does sound like a lot, but it's actually not as extreme as it sounds. And the reason for that is the most all-time highs in a year was 75, and that was back in 1995. Now, you might wonder, well, okay, what happened after that? What happened after a 75 all-time high year? And, hot run, surely things must have cooled down. But that's not what happened. The S&P made 39 new all-time highs the following year and 45 all-time highs the year after that. And then this continued on for several more years. I'm going to show you what I mean. Let me just compress this chart. Let's just step back a little bit in time, and I can show you that period. Here it is here. So here we are. We're back in the 1990s. So this is 1995. There's our 75 all-time highs. And then 1996, we've got the 39 highs, and then 45 highs, new all-time highs the following year. And this is the thing with all-time highs. They tend to cluster, and that's because that's how trends work. A series of all-time highs doesn't warn of a top. What it's doing is telling us that the trend is upwards. And of course, these trends can end at any time. None of us know that in advance. And there's going to be corrections along the way. And just look at this period. Look at this period here from the 1990s. There were plenty of pullbacks, plenty of corrections. Some of them were quite unpleasant as well, like sharp declines below the 100-day moving average. But this is during a period where there were many all-time highs and an underlying upward trend. The moving averages remain upwards for that entire period, and this is something to remember. And the thing is, the data is currently telling us that the path of least resistance remains to the upside, just like it was telling people back in the 90s. And so if we go back to our current day chart, this is what we have now. We have these rising moving averages, and price is above the averages. And we also have higher highs and higher lows generally throughout this period. So that by definition is bullish price action. We've seen prices pull back over the last few days. Over the last week, there's been a pullback. I think there's certainly scope for several weeks of consolidation, maybe even a retest of the 50-day moving average, which is something which occurs regularly within uptrends. But at this stage, there's nothing here that says we should be changing the game plan from being long equities. Switching over, let's have a quick look at the equal weight, S&P on an equal weight basis. And when we look at this, I think the overriding framework remains bullish. Again, we've got moving averages which continue to rise. I'm using the 50 and the 100-day moving averages. And the price, of course, is above those moving averages. I think in order to consider bearish scenarios, I think we'd first need to see the price decline below the moving averages and then see some sort of period consolidation beneath the averages. That would then set up a potentially vulnerable structure. This is like what we saw back over in 2001. So price like all-time highs. Like all-time highs, ultimately, at some point there will be an ultimate all-time high that finishes the move, but we often get warning signs that there's a trend change in process. And that is when price declines below the averages and we start to consolidate beneath the averages. That's when we get the vulnerable structure and we start being on guard for a trend change. But we don't have those conditions at the moment. At the moment, we have all-time highs and upward trend. But that's not the that price action we saw from 21, that's not what we currently have. So look, I think the odds continue to favor the upside. We still need to manage risk, but I think our default position should be staying long equities. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. And YouTube shows other people and brings them to my channel. It does help me a lot. So please do those things. Now, just to wrap up with a quick look at the Russell 2000, at the small caps. And it looked last week, it looked like the Russell was poised to break higher, but then it stalled up near the July high, since had this pullback to the 50-day moving average. I don't think this changes the overall structure. Prices still appear to be building along this moving average, the 50-day moving average, and beneath that, of course, we have the 100-day moving average. There's still a sequence of rising lows in place, and of course we have recent rising highs. I think the path of least resistance here, I think it remains to the upside. Last week's high and the July high now provide a key level to watch. That comes in at around 2,300. And I think if we get a break above, we see the Russell break above these previous highs, up through 2,300. I think that's probably a trigger for considering new long positions. Overall, when we compress this, have a look at it, I think we do get that breakout. There's a strong chance that we see all-time highs. So there's our previous all-time high in 21. I think there's a strong chance that we see all-time highs in the coming months. So look, let's leave that there for this week. Hopefully that's been interesting. Hope you get some ideas from that. Remember, next week, this will be within the ASX strategy session. So come over and have a look for that there. Thank you for joining me. Been great talking to you. And yeah, I hopefully see you in that ASX strategy session next week. Until then, bye for now.